Good morning, guys. Welcome to this Friday the 13th. Friday the 13th. Uh, what a day, right? What a day. So we were talking about that yesterday, in yesterday's morning analysis about how the oil prices has been creeping up the last few days and how gold was starting to move and there were a couple of different hot spots out there which potentially could be causing that. And then yesterday evening, the Israelis attacked Iran, and there we go. So that's happening now, and you see the sort of market was absolutely it went nuts when that happened, and man, that was something to see. I was watching that like, oh crap, here we go. So it's a Friday the 13th. Yes, don't do anything crazy. And then we have this whole thing spiraling, not spiraling out of control right now, but it's definitely started and you don't quite know where it's going to end. You never know. You can see oil prices spiking like crazy. They were way up almost up to $77 before they start backing off a bit. Markets tanked. And also we rolled to the September contract if you forgot, or if you didn't do it, make sure you uncheck use continuous on your chart so you get backfill. Otherwise, you'll have some weird looking charts. But we are on the expirations now. I rolled my charts, and you can see here how this whole thing started coming together. Uh, Before I get into it, looking at the news, we only have one piece of news that is consumer sentiment at 10 o'clock today. So I think that's going to be pretty much drowned out by the reactions to these strikes and the potential fallout and the market second guessing everything 15 times and then swinging back and forth and doing what markets do, price discovery, right? So, we rolled over, and you can see here we gapped up. So we started this after rolling, we started at 6100, and that's kind of where we're holding for a while. We're holding up here, and then in a little bit after, about an hour after the open, the whole thing happened, and the whole thing, you can see how the whole thing has absolutely collapsed right down here to the 6,000. So that was a 100-point move in literally like 6, 7 minutes. It was something. When I heard it, went back out and checked out my screens, and it was like way late to do anything with it. But if you were sitting there right at the screen at the time and managed to pick up the news and realize what was going on, you had a shot at getting on the short side of that. Because you know that reaction is going to be flat out short to the downside initially, and then we're getting what we're getting now, retracement, and then we'll see the fallout, what kind of retaliation is coming, what is uh, how long is this whole thing is going to go on, and so on and so forth. Uh, the next escalation step would obviously be if the Iranian attacks U.S. interests. So for it's unilaterally Israelis attacking, but you can listen to the news and make up your own mind on what you think is happening with it. Market is going to do what the market is going to do anyway. So I would start off at this point range bound. I mean, if I would probably have a net bias to the downside, just because the that's the net reaction of it. But since the reaction happened in the overnight, early in the overnight, there's been plenty of time to digest this information and kind of look for fallout, look for retaliation, stuff like that. And market hasn't absolutely fallen out of bed after the initial reaction. They've been retracing a bit. So if the outcome is pretty much a non-event, like yeah, the Iranians got the asses kicked and there's no response because they can't. They took out enough ballistic missiles to really degrade them. That could be a non-event for the market at all. If they turns out that they have a bunch more hidden and they start retaliating and you start seeing some asymmetrical stuff like terror attacks happening all over the world, well, then it may be different. So it's still out where the market is going to go with it. But I would start off range bound right now. I would watch these lower edges and these upper edges and see where they're going to go from there. So if I fold this together, this is yesterday's action, fold it together, we have an area here. We are back in it. We are back towards the upper area. But if they stay on the above that 60,050s, I would probably stay on the long side and look for a retracement trade back up again. And if they can't, and they start taking out this lower end, the 59.85 to 90s, I would stay on the short side pretty aggressively at that point. So that's where we are. Now, we are in a rollover day, so the volume is going to kind of roll over. U expiration is probably going to be a little bit light to get started this morning. And then as it fills out throughout the day, you're going to get more and more. I usually don't try to be too aggressive on a rollover day just because of that. If you want to trade the June expiration still in the beginning, that's okay. It's had to set the charge correctly. If you want to trade the September expiration, I would just wait a little bit and let the volume fill out a little bit. But overall, in the bigger picture, I would watch these lower edges at 59.85 to 90, these two support areas. If they come out on the downside, look out below. If they start taking out that 6,050s, I would hop on the long side and look for a retracement trade higher. Chances are we're going to get a pretty volatile day, volatile and non-directional, probably to get started. And as we learn more, we may see a directional move develop. That's kind of the way I'm thinking about it. But right now we are right back in the range. Now, if the market dropped the initial reaction and then start taking out these lows, the 85 to 90s, and started heading lower in the overnight, I would have started on the short side today. But if they didn't. They ran right down into that support area, backed off, built value, and in the London session retraced. So that tells you something. So at this point, range bound start. Look for a lot of volatility back and forth. It's going to be treacherous trading this Friday the 13th. I usually say thank God it's Friday, but it's Friday the 13th. You got to say that with a little bit of caution, right? if you are superstitious. So if they start trading about that 6,015, so look for the retracement trade, last short against the 65s. But they could certainly start retracing this to the upside, which would mean that the market shrugs off this whole attack and then it just totally ignores it. But there could be headlines coming out throughout the day about other attacks, asymmetrical attacks, all sorts of stuff could happen. And the whole thing is very fluid, so just stay alert. All right, so that's the ES to get started. I'm not going to be more specific on it because it's so much. The volatility could just be creating a very choppy day. So looking to sell strength, the 6,050s, maybe the 60s here for rotations back down. If they take out the 50s, I'm looking for that retracement trade. Still looking for a short against that 60-65 area for rotations back down. And looking to buy weakness, 6,000, I would say 6,015s, 05s, 59.95s, 59.85s for rotations back up again. So looking to buy these support areas, looking to sell strength. We know what the range is, and if they start breaking out of that range, yes, look for a potential go with type of trade at that point. All right, so that's the ES to get started. Expect a pretty sloppy, choppy day as this whole thing comes together and the analysis is done and we'll find out exactly what's going on. All right, NASDAQ, it's pretty light. You can see it's not a lot of volume in the NASDAQ in the U expiration to get started, so I'm going to stay away from that one this morning. Overall, the NASDAQ reaction was pretty violent as well. Big move to the downside, run into that 720, 730 area. Ran out, stalled, flat out stalled, traded back up again, and here we are pretty much in the middle of that range again. So same reaction on the NASDAQ. So looking at that 970 area, or so I should say the 930 and 970 areas. So it starts trading above the 930s. Look for potential retracement trade to the upside. 970 would be a last one and look for a short against for rotations back down. And let me see this guy. Well, maybe one higher. Maybe one higher. So maybe up here towards the 22,000s as well. So these three resistance areas for rotations back down. That is 930, 970 up to the 22,000s. And the lower edges down here at the 700s, looking to buy weakness at 21,800s, 750s, 720s for rotations back up. Now below 720s, you start taking out that support area. I think we are looking for a retracement trade right back down again. So anyway, anything can happen as as the day session kicks in. We'll see what the general market thinks about this. If they're going to try to run this lower, I would expect a initial run to the downside, and then the question is if support's going to hold or not, or they're going to try to kind of hit it harder. But the fact that the overnight hasn't really done much, even retraced a bit, just kind of makes me think it's going to be more of a range-bound trading day to get started. But you never know. We will have to just see how the initial reaction is. Um, oh, shoot. Let me talk about the bonds for a second. I forgot the bonds. So bond market hasn't reacted a whole lot, as you can see. They don't react a whole lot to this stuff. Flight to safety was a little bit yesterday, but the fact that the bond market is not reacting more than it is, it's just a calming effect. The bond market was spiking in one side or the other, I would be more concerned. But they just opened, so we'll see how it is. I would expect it to trade higher. A flight to safety would be the dynamic there. So anyone which waking up to this is going to probably try to move into bonds or gold or something like that. So initially, I would expect bonds to trade higher and gold to trade higher as the market kicks in. So initially looking to buy weakness in 114.08s, 02s down to the 1328s for rotations back up. And if they trade below that 1328, I'm just back range bound on this. So that's kind of the dynamic on the bonds. So flight to safety, we will expect higher prices on the bonds. Same story with gold. Flight to safety, geopolitical scare. They already popped pretty good in the overnight, by the way, as if you haven't paid attention, right? So looking at gold, I'm gonna check out gold there. Yeah, here we got gold. So gold, here you have the gold that spiked all the way up to the 3460s, and then it ran out of gas, started retracing a bit, hasn't retraced a whole lot. So they're holding the highs. And they start taking out this support at the 3430s. Last one to buy against is the 26s, but looking to buy weakness. They take out the 26s, look for a potential retracement trade right back here to that 3410 level. So that would be testing that volume edge again and reverse retesting it at this point. But trade gold from the long side to get started. Let's see if the day session is going to start kicking it up. So if the overnight overdid it a bit, you're probably going to see the day session knock this down a bit. If it didn't, you may see gold trade higher. And if the concern is still out there, they may just take this a lot higher. So I would start from the long side, watch these two support areas at the 3430s and the 3425s for rotations back up. And below the 25s, we are heading lower. We are retracing at that point. So that's gold. Expect is super volatile. I almost took a trade on gold in the overnight, but it is volatile. It is crazy volatile, and these bars are big. So I am just like, gold is just not. If you get into a momentum trade on gold where it's moving and you can really get on it, yes, by all means. But if it's slopping around like it is now, it's a back and forth and back and forth. It's just very difficult. And if you look at this rotation up here from the high 47 down to the 42, that's 50 ticks right there. So that's my whole stop size. So you don't have a lot of range. You really increase your stop size for this to work well. So I'm probably going to stay away from gold today. Definitely staying away from oil. Oil is the one. I told you that yesterday, that if anything, if they start shooting in the Middle East, that starts happening, the oil is going to spike. And it did. Short-term big spike to the upside. Very, very much predictable. Question is just how long it's going to stay up there. So at this point, they haven't hit, as far as I know, Iranian oil. If they start, I think the oil is going to stay high for the short term, but this is just short term because and everything else going on in the world is geared towards increasing supply. So this is just a quick reaction, and I would expect it to kind of come down pretty quick. So that's the way I'm thinking about oil. Now, if the war expands and the whole region gets kind of caught up in it, if the Saudis and the Iranians start attacking stuff in the Persian Gulf and stuff like that, that would be that would mean oil is going to stay higher. That would be an issue. But we'll see how contained this whole thing gets. But right now, initial reaction to the upside, I would stay away from oil today. I think it's going to be pretty freaking volatile. If you absolutely have to trade it, I would stay. I would prefer the long side of it, but you never know when you get the retracement and they retrace it right back down again. So it could be very volatile. I'm staying away from oil today, even if it's tempting. But it's too many cross currents. And if you're on the right side of a trade, yeah, fine, you'll be happy. If you but you can get yourself shaken out of trades and find yourself in being right, but still lose money every time because you just gets flat out shaken out of them. It's just too volatile. And that's what you're facing right now with oil. Too much volatility to trade unless you're willing to put on bigger trades or increase your stop size to handle the volatility. All right, so that's oil and gold. So gold from the long side, oil from the long side. If you want to trade it initially, be very aware of whipsaws, cross currents, and all sorts of stuff which may be coming out throughout the day. All right, back to the ES. And all right, so it's trading higher, guys. They're retracing to the upside. So it's counterintuitive given what's going on. But if you think about how the U expiration gapped up and they're trading right back up again, it is an interesting development. So I would not take that at face value right now. I'm thinking that as the day session kicks in, we may see an attempt to knock it down, and that's going to be the one which tells us how strong the market is if the once the day session starts. So there we have it. There we have it. It's Friday the 13th. If you're superstitious, may not want to trade at all, just crawl in under your desk and hide. If if you're going to trade it, I would be start off very cautiously on the September expiration. If you try to trade it, it's going to be light in volume to get started. I mean, right now we have 83,000 on the micro ES. It's a lot for the micro. Usually we haven't rolled that much. 93,000 on the full size, but this should be a little bit much higher given the what's going on. So. Uh, just be aware it's light volume to get started. I would be just holding off a little bit and see, let it fill out throughout the day and kind of get a sense for what the market is trying to do before I start taking any trades. Alrighty, guys, that's it. I'll wrap it there for now. So good trading this Friday the 13th. I'm going to emphasize that again. And we'll see how this whole thing shakes out. I'll see you guys back at 11:30 for the next update. Later.